Good morning, students. In previous video lesson, marginal costing introduction has started. In that, absorption costing, absorption costing advantages, limitations, and how we are going to calculate an absorption profit in absorption costing that we learned in previous video lesson. Through this video lesson, what is marginal cost and how we are going to know. These are the learning outcomes through this video lesson. So how do we ascertain the marginal cost? What is the equation that we learned through this video lesson? What are the advantages? What are the limitations? And there are some differences between absorption costing and marginal cost. So the differences also we learn through this video lesson. So let us continue. In previous video lesson, marginal cost, the need of marginal cost, and the marginal cost equation, marginal costing equation, and the features of marginal costing that we covered in the previous video lesson. In this video lesson, we are going to know how do we collect, how do we calculate, and how do we ascertain the marginal cost. So let us say here contribution can be calculated. So the ascertainment of marginal cost is different from total cost or absorption cost. In marginal costing, it is assumed that the difference between aggregate sales value and the aggregate marginal cost of output sold provides a fund to meet the fixed cost and the profit of the firm. So, in the in respect of each product, the difference between its sales value and the marginal cost is known as contribution made by the product to this fund. This contribution is the difference between the sales value and the marginal cost of sales, and it contributes towards fixed expenses and profit. Yes, generally, the manufacturer take into consideration while determining the price of the product. The total cost is taken into as criteria to fix the price of the product. So, whatever the total cost is there, in that total cost, fixed cost and variable cost is there. In that, the total aggregation of total cost and whatever is the expectation, that is profit is added to the total cost, then price of the product is determined. So like that, in marginal cost, so whatever the price of the product, selling price of the product is there, from that the variable cost is to be deducted, or we can say the difference between sales value and the variable cost or marginal cost, then we get contribution. The sum of fixed cost and profit will be contribution. So that's why contribution can be calculated through this equation. So it is nothing but marginal cost equation. So let us see these three examples: product A, product B, and product C. These are the three examples how we are going to get desired profit to meet the fixed expenses. So you see, uh, total sales value is 2 lakhs. Total sales value is 2 lakhs. Here you see product B total sales value is 1 lakh. And you see product total sales value is 3 lakhs. Okay, there are three different products and different sales values. From that, what is to be deducted? Marginal cost is to be deducted. That is variable cost. Variable cost of goods sold is 1,50,000. Then ultimately it gives us contribution, that is 50,000. Here you see 80,000 marginal cost. then it gives us contribution 20,000, and you see product C, this is 2 lakhs 20,000, then contribution 80,000. Now these three funds, what we say, 80,000, 20,000, and 50,000, then we get 1 lakh 50,000. So from that, fixed expenses are to be deducted 1 lakh. Then ultimately we are going to get profit, that is 50,000. So in a manufacturing unit, there are three types of products. Like this, we have variable expenses. Then ultimately we are getting this value. This value is known as contribution, the total contribution. The total contribution is nothing but fund. From that, the total fixed expenses is to be deducted. Then ultimately we are going to get this profit. So this is the process in marginal costing. So how we are getting funds? So that is in marginal costing. So let us see with the example how we are going to prepare income statement in marginal costing. The Himalayan House Limited is a large retailer in manufacturing equipment. The company's profit and loss account for the year ended 31st March 2018 is given below. Sales value is 24 lakhs, and the cost of goods sold manufactured 15 lakhs. From that, operating expenses, uh, in that category, selling expenses 3 lakhs and the administrative expenses 1 lakh 50,000. Now that is total of 4 lakhs 50,000. Now ultimately we are getting 4 lakhs 50,000, that is net profit. So this is the income statement is given in the problem. So what we have to do? The selling expenses are 90% variable and the administrative expenses are 20% variable. So here you see 20% variable means remaining is fixed. In administrative expenses, 20% variable means the remaining 80% is fixed. So you are required to prepare income statement under the marginal costing method. So let us see variable cost. Under this variable cost method, under this marginal cost method, income statement is to be prepared in vertical format. Here we have to take first sales value. Sales value is 24 lakhs. 24 lakhs. From that, what is variable cost? Cost of goods sold. That is 15 lakhs. This is a variable cost. Okay. So now 15 lakhs is taken into consideration. Selling expenses and administrative expenses. Selling and administrative expenses, there are variable expenses. So 90% variable expenses, selling and expense in 3 lakhs. In 3 lakhs, 90% of the expenses are belongs to variable expenses. So that's why 90% has been taken, and the administrative expenses 80%, sorry 20%. 20% is 20%, 1 lakh 50,000. In 1 lakh 50,000, 20% is variable, remaining is fixed. Now we are getting 18 lakhs. Mm, yes, 18 lakhs. Now we are getting contribution, 6 lakhs contribution we got. Now you see fixed cost. Fixed cost is to be deducted. So whatever the remaining 10%, that is 30,000 is fixed, and whatever the remaining 80%, that is 1 lakh 20,000 is fixed. Now you see 1 lakh 50,000 is fixed. So that's why now we are getting net profit of 4 lakhs 50,000, isn't it? So this is income statement being prepared under method of marginal costing method. So you see under this method, uh, fixed cost and variable cost is to be segregated. Fixed cost and variable cost is not considered as a single cost, where we considered as single cost in absorption method. Here we are not considering. This is segregation is most important. What is the variable expenses and what is the fixed expenses, that is to be segregated while calculating uh, marginal costing. So under this method, income statement is prepared like this. So let us see the advantages. What are the advantages in marginal costing? So in each and every method we have advantages and limitations. But let us see first what are the advantages we have. So these advantages are, it is simple to understand and easy to operate. it is very easy because we are segregating the expenses, fixed and variable, we are segregating. So that's why it is very easy. So these are the fixed expenses, these are the variable expenses. That's why it can be prepared easily, income statement. So just now we saw the valuation of closing stock under margin costing is done at marginal cost and thus prevents the illogical carry forward of fixed cost of one period to the next one as part of value of closing stock. Yes. So next we see there is no problem of computing fixed overhead recovery rates and they under or over recovery as fixed overheads are charged against the contribution against the contribution. So while computing fixed overheads recovery rate and their expenses, it can be easily charged and it can be easily calculated. So in marginal costing, it is established that a profit is a function of sale and not of production, as profit depends on sales value and not on production value. Okay, this can be verified by preparing a profit statement under marginal costing. So here we see this is not a production value, this is a sales value. So depending upon uh, sales value, it can be established, it can be known. It facilitates control over variable cost by avoiding arbitrary apportionment or allocation of fixed cost. So in previous method, that is absorption costing, there was arbitrary apportionment of expenditure. So in each department or each center, in arbitrary method, the apportionment of expenses can be done. So that is not that is not taken here. That method is not followed here. So that's why uh, it is very easy. So that was the limitation of that method. So arbitrary apportionment was the limitation of absorption method. So um, this is not followed arbitrary method. So that's why this is the advantage of marginal costing. So it is very useful tool of profit planning. Yes, it is very easy to plan. It guides the management about the profitability of earning profit at various levels of production and sales. So, in various methods, in this marginal costing, profitability can be known at various levels and various production levels and various sales levels can be easily known. And it is very valuable technique in decision making because it provides information to the management in making decisions like make or buy, selling price fixation, export decision making. So it is a simple and easy technique to the management. So fixed cost is fixed. So the decisions will be taken based on variable cost. So that's why it is very easy to take decisions. So, which cost is going to be incurred, which cost is going to be increased, which cost is going to be decreased, which cost is going to be remain constant. So, the clear-cut information easily known by under this method. So that's why management can take decisions. Better decisions can be taken. Okay, next you see it provides the management with useful techniques like break-even analysis and profit value ratio. So, in break-even analysis is a part and parcel of part of marginal costing. So, in break-even analysis, the management can be known for each product. So, what is the level of break even? Break even means there is no profit, no gain position. So, at what position the product is going to be reached, the total cost. So, then after that, the margin of safety will be started. So, that's why all the uh, techniques will be very useful. So, in below break-even analysis, what will be happen? After above break-even analysis, what will be the position? So, for each and every aspect, it is possible to the management. So that's why is very useful to the management. That is marginal costing method. So it helps in cost control by concentrating on variable cost as a fixed cost, non-controllable in the short period. So it is non-controllable to the management. Cost control, it is very useful to the management. It helps in evaluation of performance of different departments, divisions, and the salesmen. So person to person, department to department, product to product, area to area. So like that can be easily evaluated each aspect. The performance of all the aspects can be easily known by the management. Then it can be management can take decision to reduce uh, cost control to reduce abnormal expenses, wastage expenses. So that's why it is very understandable to the management. Next, we see it helps in evaluation. Okay, that is over. It is a valuable adjunct to standard costing and the budgetary costing. So this is the standard costing and the budgetary costing are the techniques which are going to be followed. The same is followed here also. So most decision making tool it is marginal cost, like standard costing and the budgetary control. Budgetary control means budgetary costing means for future the financial plan will be developed. So in production point of view, sales point of view, materials point of view, labor point of view, what cash point of view. So like that we prepare budgets. So then we can control. So in standard costing, before producing the products, before going to be produce the products, we are going to know the price of the product. Sorry, cost of the product. That is, predetermined cost will be known by the management. In the same way, here also, at what level we are going to get the profit, desired profits. So that will be known to the management. So these are the valuable techniques to the tools and techniques to the management. It furnishes a better and a more logical basis for fixation of selling price and the tendering for contract particulars, particularly when business is done. So it is very useful to um, fixing the selling price and the tendering of contract particularly when business is done. Changes in per unit variable cost reflect changes in efficiency in a far better way than changes in per unit total cost, which are affected by capacity utilization in a big way. So that's why it can be easily possible, can be easily known to the management, which means the changes in variable cost, it reflects the uh, other areas, that is the cost may be influenced. So that's why it can be easily understandable. The system of variable costing is best suited for internal reporting at a different levels of management as it reflects performance in a better way. So the reflection of internal reporting system in different levels. So from top level to middle level to lower level to middle level to top level. Various levels are there. These various levels, the variable costing method is followed, where the cost is suitable, where the method is giving better performances. So that can be known by the management. Under variable costing, contribution is determined by sales, and the variable cost are and the profit figure is not influenced by fluctuations in production and the inventory buildup. So in this method, production and the other methods, inventory methods are not influencing the profit, because here profit is calculated based on sales. So that's why uh, the sales value and the variable cost can be uh, determinable profit. So that's why the production and the other various aspects not influencing this method. So that's why this is the advantage. This is the advantage. So these are the advantages of marginal costing. So let us go for limitations. What are the disadvantages? What are the limitations, drawbacks? What are the restrictions under marginal costing? So just now we saw advantages and we are going to see limitations. The separation of expenses into fixed and variable presents certain technical difficulties, whereas marginal costing technique assumes that all expenses can be divided into fixed and variable. In fact, no variable cost is completely variable and no fixed cost is completely fixed. Actually, most of the expenses are semi-variable and it is difficult to segregate them into fixed and variable. So, in absorption method, what we follow, most of the um, expenditure is taken into consideration. Uh, so, there is no differentiation in fixed and variable cost in absorption costing. But what we are saying in marginal costing, there is a possibility to separate a fixed and a variable cost. But most of the cases may not be possible because uh, the fixed cost may not consist the total fixed. The variable cost may not consist the total variable cost. So that's why up to some extent it is may not possible. Um, so while in practice it may not be easily can be determined, can be identified which one is fixed cost, which one is variable cost. So that will be the difficult to the management. So that's why the segregation and apportion of the apportion to the concerned departments also difficult to the management. So that was a difficulty. Segregation of cost is a difficulty to the management. And next point, time taken for the completion of jobs is not given due to attention because marginal cost excludes fixed expenses which are connected with time. Fixed expenses should be considered if the suitable comparisons of two jobs is to be made. So time taken. So how much time is taken to complete a job? So it's not given in the time. So only here the fixed cost and the variable cost is a segregation can be possible is said in this method. So based on variable cost only, the management has to take decisions. So that's why time taken may not be is not given for these certain jobs. So because it may take a time, it may take a lot of time. Sometimes it may not take time. So that's why it is a little bit difficult for the comparison. And the next we see with the development of technology, fixed expenses have increased and their impact on production is much more than that variable expenses. So a system of costing which ignores fixed expenses is less effective because a significant portion of the cost representing fixed expenses is not taken care of. So here you see fixed expenses may be increased because of development, because of technology development. So we have to um, infrastructure, we have to develop technological developments. So that's why the fixed expenses may be increased. Then what about variable expenses? Variable expenses may not be effective. So fixed expenses may be effective. So up to a level of fixed expenses may not be influenced. So that's why fixed expenses may be increased, variable expenses may be decreased. Then what will be the use? So ultimately there will be a problem. So it is possible that a concern using marginal costing technique may value work in progress and a finished stock at marginal cost. The arguments against valuing these items at a marginal cost are as follows. Balance sheet will not exhibit a true and fair view because work in progress and finished stock will be shown at marginal cost, which do not include fixed expenses. Thus, finished stock and work in progress will be understated in the balance sheet. Of course, in the balance sheet, work in progress. In work in progress, you may see raw material, semi-finished goods, and the finished goods. These are the three categories of work in progress we will see, but it may not be calculated uh, accurately. So that was the problem. In case of loss by fire, full loss on account of stock destroyed by fire cannot be recovered from the insurance company because marginal costing technique of valuation of stock will not take fixed expenses into consideration. So that's why there may be a problem while firing accidents. So uh, so that's why that is a problem. A marginal costing technique does away with the difficulties involved in the apportionment of overheads because fixed expenses are deducted from total contribution. But the problem of apportionment variable cost still arises. So first we are deducting variable cost. Later we are going to deduct fixed cost. So after deducting variable cost, there may be a chance to increase in fixed cost. There may be a chance again in variable cost. So that's why a little bit difficulty is there apportionment of overheads because of fixed or deducted from total contribution. Okay, next one. Margin costing technique is difficult to apply in contract and shipbuilding industry, where the value of work in progress is high in relation to turnover. In fixed expenses not included in the valuation of work in progress, losses may occur every year till the contract is completed. While in the completion of the contract, there may be huge profits. So, marginal cost techniques may not be applicable. A little bit difficult in shipbuilding and the contract works. So that's why it is very difficult to follow these techniques. Cost control can be better achieved with the help of other techniques such as budgetary control and external costing as marginal costing. Technique does not provide any standard of the evaluation of performance, which is provided by standard costing and budgetary control costing. Yes, so in standard costing, we are fixing standards into the standards to the products. But whereas in marginal costing, we are not fixing any standards. So that's why that was a limitation of this marginal costing. Marginal costing cannot be successfully applied in cost plus contracts unless a high percentage for marginal cost. So just now we discussed the wherever contract works are there, this method is not suitable. Sometimes an order from a new customer is accepted at a very low price on the argument that if marginal cost is little less, then the price of the order it will give some contribution. This may sometimes lead to a general reduction in selling price and thus to losses. So a new customer may come to the concern manufacturing unit there uh, to attract the customer, new customers with a low price, maybe uh, agreement may be done. So that's why some then there may be a problem. Of course, it variable cost may not be recovered. So that's why there may be a problem. Okay, the technique is not suitable for external reporting. So this method is not suitable for external report. So which method is suitable for external reporting? Absorption costing method is suitable. So internal reporting it is very useful. Okay, so keep it in mind. So internal reporting system, this method, marginal costing method is suitable for internal reporting. Absorption costing is suitable for external reporting. So these reporting system are approved by the accounting standard boards also. For tax authorities, their marginal income is not considered as taxable income, taxable profit. So whatever the marginal income is calculated through this under this method, that is not acceptable by the tax authorities. So that's why which method is acceptable by the tax authorities? Absorption method is accepted by the tax authorities. Okay. Next we see the differences between these two methods. what is absorption costing and what is marginal costing. So these two methods are to known. All costs, fixed and variable, are included for ascertaining the cost. Yes, while calculating total cost, there is no differentiation between fixed cost and variable cost. The two costs are included in the total cost when calculating under the method of absorption costing. Whereas marginal costing, only variable costs are included, fixed costs are recovered from contribution. Different unit costs are obtained at different levels of output because of fixed expenses remaining same. Yes, different units of costs obtained at different levels of output because fixed expenses remaining same. See, definitely there is no change in fixed expenses. That's why at different levels, at different units, we are obtaining the same cost. Wherever in whereas in margin costing, per unit will remain same. Marginal cost per unit will remain same at different levels of output because variable expenses vary the same proportion which unit which output varies. Is according to as per the output, variable cost also may increase, variable cost also may decrease. So that's why marginal cost unit, marginal cost per unit will remain same at a different levels. So right? So whenever we included fixed cost, then there is no change. So without adding a fixed cost, then also there is no change. A difference between sales and the total cost is profit. Yes, the difference between sales and the total cost is profit. The difference between sales and the margin cost is contribution. Yes, under this method, under absorption method, the difference between total cost and the sales known as profit. Whereas in marginal costing, the difference between sales and the marginal cost is contribution. The difference between contribution and fixed cost may be profit or loss. Okay, definitely. So, next to see, a portion of fixed cost is carried forward to the next period because closing stock of work in progress and the finished goods is valued at cost of production, which is inclusive of fixed cost. In this way, cost of a particular period are vitiated because fixed cost being period cost should be charged to the period concerned and it should not be carried over to the next period. Yes, a stock of work in progress and finished goods are valued at marginal cost, which does not include fixed cost. Fixed cost of a particular period is changed to that very period is not carried over to the next period by including it in closing stock. Being so, cost of a particular period are not mitigated. So this is where we are calculating work in progress and finished goods. It is deviated because of the total cost is included, all the fixed and variable cost included under absorption costing, where in marginal costing only variable costing included, fixed cost is separated. So that's why there may be a problem while calculating work in progress and finished goods valued on this marginal cost and absorption cost. Next we see, if stocks of work in progress and finished goods increase during a period, absorption costing will reveal more profit as compared to marginal costing. When such stocks decrease, less profits are shown by absorption costing than marginal costing because under this technique of costing, closing stocks are valued at higher figures as is explained above in point 4. That is, closing stocks are valued at total cost, which is inclusive of variable cost and fixed cost. If stocks of original work in progress and finished goods increase during a period, marginal costing reports less income than absorption costing. But when such stocks decrease, the technique of marginal costing reveals more income than absorption costing. The difference in profits as arrived at under absorption costing and marginal costing is due to difference in accounting for fixed overheads. The technique of marginal costing values closing stocks at their variable cost and does not include element of fixed cost. So this is a difference between these two methods. And the next we see apportionment of fixed expenses on an arbitrary basis gives rise to over or under absorption of overheads, which ultimately makes the product cost inaccurate and unreliable. Okay, so apportionment of fixed expenses, uh, apportionment of fixed expenses are done in under absorption costing is arbitrary method is followed. So whereas in marginal costing, arbitrary method is not followed. So only variable costs are charged to products. Therefore, marginal cost technique does not lead to over or under absorption of fixed overheads. There is no over and under fixed overheads. Okay. Next we see absorption costing is not very helpful in taking managerial decisions such as whether to accept the export order or not, whether to duty or manufacture, the minimum price to be charged during the depreciation, etc. So the technique of margin costing is very helpful in taking managerial decisions because it takes into consideration the additional cost involved only assuming fixed expenses remaining constant. Okay, costs are classified according to a functional basis such as production cost, office and administrative cost, and selling and distribution cost. So under the absorption costing, the total cost is segregated as for production cost, office and administrative cost, and selling and distribution cost. So whereas in marginal costing, fixed cost and variable cost, it is classified on the basis of behavior of cost. It is classified based on the function. Okay. Now the last point, absorption costing fails to establish relationship of cost, value, and the profit as cost are seldom classified into fixed and variable cost. So under the method of absorption costing, uh, rarely it can be segregated fixed and variable cost. So that means the total cost in total cost you may see fixed cost and variable cost. So there is no segregation at all. So whereas in so it is not possible to segregate fixed and variable cost. That's why CVP analysis is not passed under absorption costing. In marginal costing, CVP analysis possible. Why? Because the segregation of cost is possible. So here marginal cost, that is variable cost, is taken into consideration. That's why CVP analysis is possible in marginal costing. CVP analysis is not possible under the method of absorption costing. Okay. So with this we are so with this whatever we have discussed, whatever discussed that is learning outcomes through these video lessons. These are the learning outcomes we discussed so far in this video lesson. So first one is ascertainment of marginal cost and advantages. Next one, limitations. What are the limitations and differences between the both the methods, that is absorption costing and marginal costing. So that's why uh, these are the learning outcomes in this through this video lesson. Students, please concentrate on this video lesson. Please subscribe my channel. So with this video lesson, I'm concluding. So thank you. Thank you very much. In the next video lesson, we will meet again. So with this, I'm concluding. On the next video lesson, we will meet again. and please watch. These two methods are most important. Of course, in decision making, uh, margin costing is most useful method. So thank you one and all.